This video is for educational purposes only and is not financial advice. Always consult a professional before investing. Before we dive in, let's get one thing straight. It is not financial advice. Fed's 97.6% chance of a November cut. Bull run accelerator? History gives us a few clues. Past easing pivots often acted like a starting pistol for rallies. That's not a maybe. It's as close to a sure thing as markets get. So, will cuts fuel your gains in Q4? Let's unpack what a cut means, how it can boost a bull run, and the risks that could derail it. Let's break this down into simple terms. When you hear that the Fed is cutting rates, they're talking about the federal funds rate. It's the interest rate at which banks lend to each other overnight. It's the foundation of our financial system, the wholesale cost of money. When the Fed cuts, banks borrow cheaper, and those savings flow outward. It gets cheaper for businesses to expand, for you to get a mortgage, and for you to finance a car. Think of it as a sale on money that encourages spending and investment. You'll often hear basis points. 1 basis point is 0.01%. So a 25 basis point cut lowers the target by 0.25%. Small number, big ripple. Analysts see 1 or even 2 more cuts by year end, a tailwind into 2026. QT drains liquidity as the Fed shrinks its balance sheet. Cuts work the other way, a stimulus injection that offsets QT's drag. It's like easing off the brake, still controlled, but less restrictive. For investors, it's a shift from fighting inflation to promoting growth. So how does a rate cut translate into a supercharged portfolio? One word, liquidity. Lower rates pump more money through the system, and that cash seeks returns. Add more water to the river, the current strengthens and carries assets higher. That tailwind could fuel a significant Q4 bull run in 2025. Experts are weighing in. If cuts land as expected, stocks could sprint into year-end. Some projections put the S&P 500 up 10 to 15% in Q4. A dovish pivot alone could add around 10%. It's not just stocks. Crypto often benefits from low rates and abundant liquidity. Lower yields make safe havens less compelling, pushing investors out the risk curve. Growth stocks, tech, small caps, historically the biggest beneficiaries of cheap money. Cheaper borrowing lets firms refinance, freeing cash for buybacks, dividends, and new projects. That supports earnings and prices. Psychology matters. A cut signals support. It's CBE it's signal support. It's the perceived safety net for the economy. Confidence can lift valuations as investors pay more for future earnings. That can set off a self-sustaining cycle of positive momentum. Bottom line, more liquidity, stronger earnings, better sentiment. The classic cocktail for a late-year rally. Of course, it's never that simple. Inflation at 3.2% remains a headwind. Cut too soon, and a resurgence could force a painful reversal back to hikes. That could shock markets and end a rally fast. After the first cut, results are mixed. The reason for cutting matters most. If inflation's contained and growth is steady, markets tend to do well. If recession looms, the first cut can be bearish. With odds this high, the cut may be priced in. We could see a quick post-announcement dip. Guidance may matter more than the first cut. How many, how fast, and how far. Any hesitation on a sustained easing path could disappoint bullish hopes. We're at a crossroads, powerful easing precedents versus lingering inflation and growth risks. For long-term investors, stick to your plan, but review allocations. Are you comfortable with growth sectors that benefit most from lower rates? Balance diversification with your risk tolerance. Avoid all or nothing moves. If you favor a soft landing, consider dollar cost averaging over the next few months. Worried about recession? Emphasize high-quality bonds and consumer staples. Have a plan before the Fed speaks. Bonds. It helps you navigate with confidence. How are you thinking about this potential shift? Major buy, more caution, or stay the course? Subscribe for Fed updates and comment your bull play below. Whatever comes next, preparation beats prediction. See you on decision day.